trading. It's Thursday, June 18th. I'm Sharna Bobi, and this is Closing Price from FNDATA. It was a two-sided day. After 2 sessions of losses driven by the Federal Reserve's signal that it intends to keep interest rates higher for longer, stocks rebounded and the luxury shares bounced back on both sides of the Atlantic. But that same message, by lifting the dollar and bond yields, hammered precious metals as gold and silver both fell hard. In short, money rotated out of metals and back into equities. Let's start with the luxury names which recovered much of the ground they lost this week. In Europe, Kering, the owner of Gucci, ticker KER, led the way, closing at €276.55, up about 4.4%. Hermès, ticker RMS, gained about 2% to €1,763. Watches of Switzerland, about 2.4%, and Richemont and Burberry each about 1.7%. The one laggard was LVMH, ticker MC in Paris, which closed at €505, down about 1.2%. In New York, the bounce was just as broad. Movado, ticker MV, the watchmaker we described yesterday as a name investors give little credit, actually led the group, closing at $38.46, up about 3.3%. Capri Holdings, the parent of Versace, ticker CPRI, rose about 3% to $20.32. Ralph Lauren rose about 2.3% to $413, and Ferrari, ticker RACE, about 2.2% to $362. Tapestry, the owner of Coach, was the exception, down about 1.6% to $143.50. Ferrari was in the news for another reason of its own. Bloomberg reports that the company is using orders for its new electric car, the Luce, as a loyalty test. The Luce cost about $636,000 and has been coolly received, but clients are being told that buying one helps to protect their access to Ferrari's most coveted limited models, cars like the multi-million-dollar LaFerrari Aperta. This is a window into how the very top of the luxury market actually works. The most rare products are not sold to whoever shows up first. Rather, they are allocated to the most loyal and high-spending customers. Demand, in other words, is something that Ferrari engineers as much as it meets. The sharpest move of the day went the other way in precious metals. Gold fell about 3.3% to around $4,214 an ounce, and silver dropped about 7.3% to around $65. That is a striking reversal because only 2 days ago, gold was setting records. Oil eased as well, down about 2% to around $75 a barrel. That sell-off is a reminder that not all hard assets behave the same way. Gold and silver carry a spot price that can swing several percent in a session. The most rare physical objects, the kind that trade in the auction room, have no spot price at all. They trade on scarcity, and right now that market is firm. Just this month, the Christie's Magnificent Jewels sale in New York totaled $49.7 million and sold every single lot, even as gold and silver were selling off. Pearls make the point most cleanly of all, because unlike gold, they're not a commodity with a daily quote. The most valuable pearl ever sold at auction was a pendant that once belonged to Marie Antoinette. It brought in $36.2 million at Sotheby's in 2018, setting a world record for a pearl. A value like that does not move when the Federal Reserve shifts its tone. It rests on history and rarity. Across the broader markets, the rebound was led by technology. The Nasdaq rose about 1.9% to around 26,500, the S&P 500 about 1.1% to around 7,500, and the Dow finished roughly flat near 51,600. Beneath the surface, the post-Fed picture held firm. The dollar strengthened and Treasury yields rose, the same forces weighing on gold. After 2 days of worry, investors decided that the Fed's tougher stance on rates was not in the end a reason to keep selling stocks. One footnote from the Fed itself: in his debut, Kevin Warsh broke with tradition by declining to publish his own interest rate projection, the so-called dot. And he launched a sweeping review of how the central bank communicates, a signal that he intends to reshape the institution, not just run it. In summary, luxury shares rebounded, led by Kering in Europe and Movado in the US. Gold and silver fell hard, and a tech-led rally lifted the Nasdaq about 1.9%. Looking ahead, Art Basel runs throughout the weekend, and the collector car world now turns toward Monterey Car Week in August. That's it on closing price for today, Thursday, June 18th. Open bid returns tomorrow morning at 6 a.m. Eastern, and closing price is back tomorrow evening at 5 p.m. For more insights on the stories behind today's closing price, explore the FNDATA Market Index and datasets, which track the secondary market signals behind the luxury names we follow. You can start for free in our data sandbox. To get started, visit our website at altfndata.com or reach us by email at info@altfndata.com. Subscribe to be notified of new episodes, and if you love the show, please leave us a 5-star rating on Spotify and Apple Podcasts. I'm Sharna Bobi from FNDATA. I'll talk to you in the next episode. Thank you for listening.